All right, so in this video, we're going to look at a custom order to sell, to open, put options. In this case, this is SPY. This is part of the short SPY campaign that I've got going since October 2021. And here are some of the results from when I first initiated this campaign. So we had total 280 trades. We currently have 20 trades that are open. I think I closed one earlier today. This was a GTC order that was filled, so this is not reflected on this snapshot, but we have about 260 closed trades. We have 252 wins, a couple of losses. And as far as losses, we'll talk about that in just a second. So this has been, a pretty solid strategy. This is going back to 2021, and we've had a pretty steady rising market as well as a pretty nasty back and forth in 2022. And this trade has held up pretty well. There were a few times where instead of stopping out of the trade, I'd committed to take an assignment and fortunately or unfortunately, I'm not sure, I was never assigned any shares, but if I was, it's a very simple plan that I'm going to follow. I'm just going to sell covered cost, hopefully above my cost basis, and wheel myself out of any shares of SPY that I may be assigned. So these are positions that I'm currently holding. They have been open for some time now, and I'm still adding to the 20 oct expiration, which is 53 days away. So let's talk about the order. The order I have already in my Thinkorswim. What I do here is I go to a trade tab. I find the strike that I'm going to sell. I right click on that specific strike. We get a menu here. We have a sell custom option here. And then this is a list of some of the preset orders that I have set up. And the one that I use, I don't send an order with a stop. I do have, let me show you what that looks like. So here we have, if I'm selling to open October 20th, 398 put, it's currently going for $1.37. And then simultaneously, once this order gets filled, right, the order that gets filled, it triggers the next order, which is a buy. And this is going to be to close. If sell to open fills, this order becomes buy to close. Same exact strike, 398, right? This order is triggered by the initial order, which is sell to open. And then as my target, I have 80%. So when the put that I'm selling is going to be at minus 80%, right? It's going to lose 80% of its value, right? So the Thinkorswim is going to automatically figure out what my fill price was. It's going to take 80% away from that price, which will leave us with a 20% of the original entry, and that is going to be the price at which this put is going to be closed. So the reason why I don't put any specific dollar amount here, because I don't know what fill I'm going to get. So I'm only interested to close this put at 20% remaining value, or when this put will lose 80% of the credit that we are collecting. So that's one way I do it. And the reason why I don't include a stop loss here is because, again, depending on what's happening in the market, how fast we get to a point where I need to make a decision, right? This specific put has 53 days until expiration. I would consider taking assignment, given that we don't crash there, meaning we don't get down to 398 level on SPY in like 2 or 3 days, right? Because if we can look at 398 is currently about 8 delta, which means there's more than 90% probability that this put is going to expire out of the money, meaning that I'm going to keep majority of the credit that I am collecting. However, if things change and the market starts to really roll over in the next few days, right, and we get to 398 in like 4 trading days or in a week, I need to make a decision. Do I want to take assignment, or do I need to stop out of my position? I'd like to leave that decision open, or here's another way I would enter this, and this is a different custom order that I have. Let's use the same 398 as an example. So here I right click, I go to sell custom, and then here I share this with the group. I'll share it again. Short SPY puts, buy back at 80% profit, or stop at 3x. And this is what this order would look like. All right, we could change the quantity to whatever the quantity we would like to trade. But the idea here is this is a first, right, triggers OCO, and the way it works is that I'm selling to open three $398 puts on SPY in the 20 oct expiration. Current price is about $1.38. When and if this to open order fills, I have the OCO, right? It's a GTC order that's going to go in, and either I'm going to buy to close at 80% of original credit, or I'm going to buy to close at an increase in the initial credit by 300%. So that's my 3x stop. So they can get filled both at once. It's one or the other, right? One cancels other. That's what OCO stands for. So when sell to open fills, it will send another order, which is an OCO, and it's either I'm going to hit my 80% target, or I'm going to get out of the trade at a 300% increase in the price of the put that I'm selling, and that's my stop loss. So this is the order with a stop. I use orders without putting in the stop, and if and when the market gets to a point where I need to make that decision, I will. And it's pretty simple. Either I stop out, or I take assignment, I take the shares, and then I sell calls against those shares, collect more premium, and eventually, assuming that the market goes up over time, I will be able to get out of those shares at some point in the future. Now, this could be buying power intensive. If you don't have the buying power to take the shares, then obviously that may not be an option. But anyways, for today, Monday, and this is the trade that I do Monday, Wednesday, Friday, I'm going to sell to open the $398 put. It's currently going for $1.36, and my target is going to be 80% of credit that I'm going to collect. So I'm going to look to get out when this put will lose about 80% of its value. So that's my trade. I'm going to share the custom order templates, and if you have any questions, let me know. This is a list of orders that I have working. Most of them are SPY to close, right? These orders that were sent in automatically, and they were triggered by my initial entry. This is the latest. This is the one that we just talked about. I filled 3 short SPY puts to open for $1.36, and Thinkorswim automatically sent an order. This was triggered by my fill at minus 80% of original value, and now this order is a GTC. It's going to hang in there until we hit a 27-cent debit. That's my exit. Or if the market rolls over and I'm facing the decision to either take shares and figure out what to do with them, then I will have to probably cancel this order. We don't want it to, if I'm going to take an assignment, this order will need to be canceled manually. I can also, I guess I can change the custom order to have the order not just GTC, not good until canceled, but I can do a good until certain date. And I would put the expiration, which is October 20th, as my good till date. So I may tweak that custom order a little bit, but that's the idea. So we have one order. Once it gets filled, it automatically sends another order to get out at a profit target or get out at a stop loss. And just very convenient, in my opinion. Saves some time, an extra few clicks. I've shared this with you guys. Hope you're using it. If you have any questions, let me know.